Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. Sophisticated investors are moving into cryptocurrency, with trading volumes suggesting established investors are now shaping the future of digital assets. That's a sharp shift away from the small retail investors that typified the early crypto boom. The third annual investor study report from Australian cryptocurrency exchange BTC Markets also suggests female investors and older investors are accessing cryptocurrency in greater numbers as the market matures. Remember, this is general information only, and you should always seek professional advice before making investment decisions. Caroline Bowler is the Chief Executive Officer of BTC Markets. Caroline, welcome to Fear and Greed.
Thanks so much for having me.
So what is going on with the sophisticated investors not pushing out retail investors, I'm sure they're still there, but getting more interested in crypto?
Yeah, so what we've seen is the likes of SMSFs, trusts, and other kind of non-retail investors are coming into cryptocurrency in a way that they haven't before. We know there's about $1 billion, according to the ATO, held by SMSFs in cryptocurrency, which is obviously an improvement year on year. But what we've seen too is not just that they're coming in greater number, but they're also in greater deposit size. So this is where it's interesting. They're exhibiting what I would classify as, standard issue SMSF behavior. They're coming in with larger trade volume, but they're trading less frequently. So they're coming in, whereas your average retailer, say perhaps they're coming in with, $1,000 deposits, but they trade that on a regular basis. Instead, these guys are coming in with a longly held position of, say, maybe, $10,000 worth of Bitcoin, and they're holding it for a longer period of time rather than trading it in and out. In many ways, actually, that mirrors the behavior that we've seen from female investors traditionally as well, that they tend to buy and hold. They don't come in to trade with the same volume that men do, but they come in and they buy and they hold. They hold large positions. But that's what we've seen with SMSFs and trusts and the like coming onto the platform.
Okay, so I suppose it's not that much of a surprise that SMSFs are buying greater amounts and holding them for longer. The idea with a superannuation fund, of course, is that you're saving for retirement. It's not a trading platform. Are there any restrictions on how SMSFs can buy cryptos, hold cryptos, that type of thing that might be restraining the amount or the time held?
Yeah, I don't believe that there are specific restrictions on SMSFs in general. I think that there are obviously restrictions based on how the SMSF itself is set up and the kind of particular to that particular fund. But more broadly, I don't think that there are issues. What we have found, though, is that there seems to be a coalescence around certain assets, seem to be the most popular. And they've kind of fallen lockstep with the majority of the industry or a majority of people who are trading and buying. Bitcoin's the number one most popular asset for SMSFs, which makes sense as well. It does fit rather well with the thesis of, as you say, that longer term investment profile. Bitcoin certainly matches up with that. But they're also interested in Ethereum, which is probably the better known utility platform. It's supposed to be kind of how the blockchain economy is going to be built, is going to be on the Ethereum ecosystem. But alongside that, then there's likes of Solana that have come through, particularly over the last 12 months, which is kind of known as a pretender to the Ethereum crown. It's another one of those utility platforms that's been coming along and doing very well. So there isn't a huge amount of variety per se. Like they are sticking with what we would classify as large cap crypto if you use traditional language. But the fact that they're coming in is really significant. As I say, the ATO reckon they've got about $1 billion in Australia held up in crypto for SMSF.
Okay, what about retail investors in crypto? Have they decreased the amount that they're trading, or is it just that there's the bigger share is coming through SMSFs and others?
Yeah, I think we've seen a change in the retail behavior, and certainly even along gender lines, we can see the changes. Men tend to be far more active in general in a bull market, pare back their behavior in the bear cycle that we've seen. Whereas, in fact, we've seen that women probably skew differently in that sense, that the women are actually less busy in the bull and busier in the bear. But what we have found is that women traders in crypto or women investors in crypto, their portfolio performs better in a bear than it does in a bull. And I think that probably, again, possibly mirrors what we see in traditional markets in terms of the risk profiles stacking up between the two genders. And sometimes those stereotypes are there for a reason. And certainly we've seen that. So what we've seen, as I say, is there's definitely been a pare back in the number of trades that we're seeing coming through for retail and non-retail. But that is a trajectory that we anticipate is going to shift as we move into the next calendar year in particular.
Okay, so in terms of volumes, I get that the sizes are larger, but total trade volume, there was a big jump last year, wasn't there, in certainly through your platform?
Yeah, absolutely. So we saw many people had called it the return of the bull, or certainly they're getting, that we'd moved past the bear. I don't necessarily know that we had moved out of a bear market per se. We did see a change, a positive change in the price of Bitcoin that was led by the ETF announcements coming out of the United States. But do I think that the investor sentiment shifted hugely? No, I don't. I don't think that retail felt like they could come back in yet in large shapes. And certainly, although we did see the year-on-year improvement, we definitely haven't been back into that FOMO trade, that bull trade. But we were coming off the back of a particularly prolonged and particularly pronounced bear market where it was very, very low in terms of trading volume. But thankfully we turned that corner. But to be fair, I don't think we're going to see a return to buoyancy in the markets until kind of the tail end of this into next year. And that's as much to do with the liquidity that's out in the market as it is, global macro issues that are at play more so than just specific to cryptocurrency.
Stay with me, Caroline. We'll be back in a minute. My guest today is Caroline Bowler, CEO of BTC Markets. We talked about the Bitcoin halving event. I think it was the fourth Bitcoin halving event. Did that actually have an impact on the market?
Yeah, it does. There always tends to be in the build up to it. We see it, the ramp up in the price of Bitcoin, and I think there's kind of this expectation that the floodgates are now open. We've had the halving. We tend to see the impact of that come 6 months post halving or the following. That kind of time frame seems to be when the shift happens. And there's always this talk of, not always, but there is generally a conversation then around, is this going to be the halving where the wheels fall off and that just hasn't happened. We haven't seen that happen. And I think at this point, given how many times we've gone through this experience as an industry, I think it's relatively safe to assume that that's not going to be the case, that the technology is working as it should do. But certainly, I think that in prior cycles, because the halving event was considered so novel, there was probably a lot more hype around what was transpiring. Now, at this point, as you say, we've gone through 4 of these instances. The world has changed. The macro conversations has changed. The expectation around Bitcoin has changed. I think the industry, or the value rather of the Bitcoin is kind of has priced all of this in already. And certainly we see that when it comes to Bitcoin halvings.
Has the crypto industry matured enough to say that there are now 3, 4, 5, 6 primary cryptocurrencies, and the meme stocks and the meme events is a better way of putting it, are a thing of yesteryear, and investors are just focused on a bunch of more mature currencies, or not?
I think that there is absolutely a market for meme tokens in the same way that there's always a market for penny stocks. There'll always be a market, I think, for memes in the industry. And I think that there are people out there who make money off of it and do really well on their investments in those. That's not something that BTC Markets that we focus on. We don't tend to list those. We tend to, as you described, look at projects that we feel have got a longer term use case, or, they're going to be around longer. And it's, we don't give any guarantees with that, but instead we look up the white paper, conduct an extensive due diligence around what we list, because that's the platform that we are. If you want to do the meme stocks, there are plenty of other platforms for that, but this is what we specifically kind of have focused on, and that's the segment that we work with. To your point, if you look at the concentration within just Bitcoin and Ethereum, they're, at any one point in time, is about 60% of market cap is in those 2 assets. So, the market itself decides where they think the value is and where they think the long term is. I know there's plenty of people who've made money on memes, and I know there's plenty of people who view them as fun in the same way as, I say, the penny stocks. They view them in the same way as, they have a punt on them. And that's an entirely valid viewpoint. It's just not what we do for business.
Yeah. Older investors, in your report, you also talk about older investors. They're increasingly open to cryptocurrencies, Caroline.
Yeah, absolutely. And I think that probably bucks the trend of many's expectations that people kind of think, oh, it's just 25-year-old men in hoodies that are into cryptocurrency. And that's just not the case. And certainly we found people who perhaps, the way that they view it may be different in the sense that they look at it as they would other alternative investments, where you generally put, between 5 to 15%, say, of your investment portfolio goes into those assets. And certainly that's what we've seen kind of come through from that demographic. But they have been coming into this market over the last 5 years that we've been running this survey in particular, that they've been coming into this market, they've been investing in it, and they're increasingly doing so. They, rather like the rest of traditional finance, what they hold in larger amounts. They have larger balances, if you like, of cryptocurrency. They trade less frequently again than other age groups, but that's exactly what you'd expect. They've already gone through the wealth accumulation stage. They're now in the wealth protection stage, whereas the 25-year-olds are trying to accumulate like mad, wearing their hoodies and having a great time doing so. And so they trade with far greater frequency. But it's this perception that cryptocurrency is, elitist in some way, or that it's only for people who can understand how to program a blockchain, or any kind of presupposition about what people are supposed to be able to do. It's just not the case. It's just not true. And this idea that just because you're older means that you are incapable of doing some research into Bitcoin, again, is a falsehood that Australians are challenging every day. Those falsehoods out there.
One last one, and this is purely for me because I never quite understand stable coins. The idea that it's kind of over time, they're stable, they're remaining in a value. Where does that fit into the ecosystem, and is it a growing part of the ecosystem?
The single largest trading over the last couple of years has been in stablecoins, which I think says everything about the direction that this is going in. Stablecoins are used within the blockchain economy, as we call it. So when I talked about those businesses and organizations that are building using the Ethereum blockchain or Solana blockchain, for example, oftentimes to access and pay for the services that are being provided on those, you can pay for them through stablecoins. And so what you could do, and I know very much of examples where this has been the case, where you want to send money to a friend, for example, who lives overseas. Or even for me, when I'm trying to send money to my nephew for his birthday, I can buy US dollar through Tether or USDC or some other stable coin and send it to his cryptocurrency account of his crypto. I'm talking about $100 here. I'm not talking about large numbers that you need to be concerning anyone with. But happy birthday kind of gift. And that's across to him in a matter of seconds. He can cash it out on the other side in his Euro account. He can do the FX on that side and he cashes out in Euro. It's done incredibly quickly, incredibly inexpensively, but you can send it anywhere in the world and to anyone. Now, obviously, there's AML, KYC checks and so on. I mean, we'll just take that as a given. But in terms of utility of something like a stablecoin, particularly if your currency isn't as strong as the Aussie dollar or the euro, and you need to try and hedge your currency exposure, buying into a stablecoin is incredibly easy to do so. And as I say, backed up by dollars on the other side of it. So for every $1 of a US dollar stable coin you buy, on the other side of that is $1 sitting in a bank account or a trust or in T-bills on the back of it. That's the thesis behind it.
I think I understand it now.
Oh, brilliant. Oh, fantastic.
Thank you for talking to Fear and Greed this morning.
Thank you.
That was Caroline Bowler, Chief Executive of BTC Markets. This is the Fear and Greed business interview. Remember, this is general information only, and you should seek professional advice before making investment decisions. Join us every morning for the full episode of Fear and Greed, daily business news for people who make their own decisions. I'm Sean Aylmer. Enjoy your day.